Hi, I'm Dongsheng. Welcome to Digging into China, where we explore China in depth to reveal unique perspectives. Let's continue our discussion on BYD, focusing on a public relations misstep from late May, when public sentiment began labeling BYD as the Evergrande of the auto industry, a reference implied by Great Wall Motors chairman Wei Jianjun. BYD's public relations general manager Li Yunfei responded swiftly. He issued a strongly worded statement dismissing all criticism of BYD as malicious attacks by adversarial forces. He even announced that the company had reported the matter to authorities and was prepared to pursue legal action. While I cannot comment on the expertise of BYD CEO Wang Chuanfu in automotive manufacturing, his choice of Li Yunfei as a PR head seems questionable. Li's approach appears aggressive, resembling a combative stance that prioritizes confrontation over constructive dialogue. Remarkably, BYD seems to misunderstand the source of this widespread negative sentiment. Without the implicit approval of high-level authorities such as Xi Jinping, would these criticisms have gained traction? Furthermore, on May 30th, the Ministry of Industry and Information Technology issued a directive to address the destructive cutthroat competition within the auto industry, clearly signal the government's position. A prudent response from BYD would have been to adopt a humble stance, acknowledge any missteps, and emphasize self-reflection. For instance, they could have stated their commitment to following government guidance, conducting an internal review of competitive practices, and correcting any issues found or striving to improve if none were identified. BYD could have underscored its willingness to collaborate with industry peers, emphasizing that all are part of China's auto sector, united in advancing national interests and expanding the market collectively rather than engaging in harmful infighting. At the very least, this should have been the tone conveyed. However, BYD appears to have grown overly confident, perhaps unaccustomed to humility. Adding to the missteps, Li Yunfei cited the company's financial data to clarify matters, which only invited further scrutiny. It's widely understood that the financial reports from Chinese listed companies, including BYD, are often subject to manipulation, designed to impress those unfamiliar with the intricacies. Financial manipulation varies in sophistication. Basic tactics like altering numbers or fabricating revenue are quickly exposed. More advanced methods, however, appear compliant and legal, using financial maneuvers to create illusions of profitability. Over the past few years, Luckin Coffee and Evergrande have provided stark examples of both approaches, serving as cautionary tales of corporate financial misconduct in China. In this video, we'll analyze the tactics used by Luckin and Evergrande and apply those insights to scrutinize BYD's financial statements for potential discrepancies. Let's begin with Luckin Coffee's high-profile financial fraud case, which reverberated globally. When Luckin went public in the US in 2019, it positioned itself as a ground symbol of Chinese innovation. In under 2 years, it becomes China's leading coffee chain, boldly claimed it would surpass Starbucks, much like BYD's ambitions to overtake Tesla. The company captivated the capital markets with its meteoric rise. Then, in March 2020, Muddy Waters, a US short-selling firm, released an 89-page report that stunned Wall Street. The report exposed Luckin's financial manipulations through 3 primary methods. 1. Fabricated transaction revenue. Muddy Waters employed over 90 individuals to manually track customers' traffic at thousands of Luckin stores. Their findings revealed that nearly half of the orders reported in Luckin's financials were fictitious, inflating revenue by almost double. Second, fictitious marketing expenses. Luckin claimed to have spent hundreds of millions on advertising, but much of this money was never spent. Instead, it was funneled through affiliated companies, cycled back to Luckin, and recorded as revenue and profit. This created the appearance of financial health to match the fabricated revenue. Third, back-end data manipulation. Luckin controlled its proprietary back-end system, including orders, coupons, sales records, and customer data. They simply altered the system to inflate sales figures for non-existent transactions, a crude, low-cost, but highly risky tactic. When exposed, Luckin was forced to delist from the US market. Its CEO and CFO resigned, and the company faced a $180 million fine. Luckin's approach was rudimentary, relying on direct data manipulation to fabricate cash flow, making it vulnerable to detection. Evergrande, by contrast, employed more sophisticated techniques which were harder to uncover immediately. Their methods included 1. Premature revenue recognition. For example, Evergrande might have a project in its early stages with completion a year away. To boost the current year financials, they organized internal group purchase discounts, signing contracts with buyers or affiliates. These contracts, backed by deposits or full payments, were recorded as sales revenue, creating impressive sold but undelivered figures. In reality, these projects were incomplete. Buyers might be insiders, and the contracts could include a hidden clause allowing refunds or cancellations, undisclosed in the financials. On paper, everything appeared legitimate, but it was deceptive. Second, asset inflation and debt concealment. This was a common strategy among large Chinese conglomerates. Evergrande used several tactics. Off-balance sheet financing. They established numerous affiliated companies, some wholly owned, others under proxies. These entities took on loans or issued bonds, funneling funds to Evergrande's projects while keeping the debt off Evergrande's balance sheet, and disguise the loans as equity. When banks hesitate to lend, Evergrande has investors purchase shares in subsidiaries with repurchase agreements, effectively creating high-interest loans disguised as equity investments, excluded from reported liabilities. Asset overvaluation. Evergrande inflated the value of its land reserves, portraying them as highly valuable in reports. Many were in remote areas, overpriced, restricted, or even mortgaged and undevelopable. A plot valued at $5 billion in their books might be worth only $300 million in reality. Internal transactions. With subsidiaries spanning real estate, healthcare, automotive, and more, Evergrande orchestrated deals among them, like selling unfinished projects or prepaying management fees to inflate revenue and profits. The money stayed within the Evergrande ecosystem, artificially boosting performance. Now let's apply these insights to BYD. On the surface, BYD appears unstoppable, leading global sales, dominating exports, and posting soaring profits, with ambitions to challenge Tesla. Yet, a closer look at their financials reveals concerning patterns. 1. Profit cash flow divergence. BYD's profit reached over 30 billion yuan in 2023 and continued climbing in 2024, but their operating cash flows has declined for 2 consecutive years, starkly diverging from profit growth. This suggests that the reported earnings aren't translating into actual cash, a hallmark of paper wealth. In auditing, such a discrepancy is a major warning sign of potential financial manipulation. Second, unusually high accounts receivable. BYD's domestic dealers reportedly pay upfront for vehicles, yet their financials show 50 to 60 billion in accounts receivable. This raises questions. Possible explanations include slow government payments, stronger overseas dealers delaying payments, or fictitious sales involving insiders with agreements to buy back vehicles later. Third, surging inventory. In first quarter 2025, BYD's inventory ballooned to 154.3 billion, a 30% increase from the previous year. This suggests they are producing far more cars than they can sell. Possible causes include export deals structured as leases with buyback guarantees, overexpanded domestic production outpacing demand, or dealers holding cars still counted in BYD's inventory. High inventory risks include depreciation from price cuts, dealer defaults, cash flow strains, and inflated profits from amortized costs. 4. Opaque financial maneuvers. How does BYD maintain 18 to 22% gross margins during a price war while R&D expenses remain flat or decline? This could indicate deferred costs, capitalized R&D spread over years, or hidden rebates or discounts inflating profits. Similar tactics were used by Evergrande. Additionally, BYD's export growth lacks transparency in payment terms or customer details, raising concerns about potential fake sales. With numerous subsidies, internal transactions could also inflate figures. 5. Reliance on subsidies. Up to 40% of BYD's profits in some quarters come from government subsidies, which could disappear if the electric vehicle sector falters. BYD's profit padding may be a strategy to prepare for this, but it won't help if cash flow collapses. BYD's aggressive expansion reliant on short-term debt and long-term investments echoes Evergrande's trajectory, risking a cash flow crisis. Some argue that compared to other Chinese automakers, BYD's financials are relatively robust, suggesting others would fall first. This less bad defense is precisely what BYD's PR team leans on. Evergrande's collapse wasn't isolated. Country Garden, Sonic, and countless smaller developers also faltered. Similarly, labeling BYD as Evergrande doesn't absolve others. The EV sector is repeating real estate's mistakes, overexpansion, price wars, and cash-burning financing, with glossy profits masking cash flow issues. As the industry leader, BYD carries the highest leverage and impact. The issue isn't just BYD, it's the looming burst of China's EV bubble, signaling an industry-wide crisis. Just as few foresaw real estate downfall before Evergrande's collapse, who could have predicted the sector's current state? Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.